the big questions for people this year will be what on earth is happening with interest rates at the moment? Particularly, I imagine, for people who have mortgages, because, hey, if the interest rates remain high or even worse, keep going up, of course, that impacts a percentage of our income. It affects the lives of so many people. And look, honestly, I don't really understand how this works. Got something to do with the OCR and the Reserve Bank and government policy and all that type of stuff. That tends to influence the way interest rates go. But hey, because I don't understand it, I've contacted somebody who does. Dan Mazengarb, CEO of Christian Savings, joins us on the program. Dan, kia ora, welcome to the show.
Kia ora, good morning. And I do apologise for my casual attire, Andrew. I am technically on annual leave today, but talking with you is a highlight of my fortnight, so I just couldn't stay away.
Look, hey, very much appreciate that. And hey, Casual Friday, that's a good vibe. I just feel honoured that you wanted to spend part of your holiday with me. It's a little bit weird, but it's mostly honouring, Dan. And thank you so much for joining us. Now, the OCR, the official cash rate, this is one of the levers that gets used to perhaps adjust or nudge or at least send a signal about interest rates. No change again this week, though, I understand.
Yeah, and look, it was quite an interesting one, Andrew, because a couple of months ago, the chatter in the market was, hey, good news, we think interest rates will be dropping maybe around August. There'll be some OCR cuts and banks will follow with their rates. And then about 2 weeks ago, a couple of banks, I'm not going to mention who they were, came out and
They know who they are. They know who they are.
Yeah, they will. This will be on their conscience. They said, oh, hang on, guys. We actually think there'll be 2 further rises of 25 pips each. Which you know, sent a few shockwaves through the market saying, well, actually, what's going on here? And I did enjoy one commentary, cynical commentary, which was, this is one way of a bank to say, hey, could you fix in for 2 years at these higher rates because we're about to reduce our rates and we want to make a bit of margin on the
There is a bit of that. Yeah, there is a bit of that.
Yeah. And I'm not. You know, I don't want to get into a defamation case, so I'm not asserting that that's true. But
that is somebody else's speculation, not ours. Exactly. We're just reporting on it. Yeah.
And so it was good to reach Wednesday with a no change because one thing that wasn't mentioned in the Reserve Bank statement online was what's happening in the personal mortgage space and underperforming loans, and that has risen. So the number of underperforming loans has risen to a 10-year high.
Mm-hmm.
So whilst not part of the official statement, there is data coming out showing that, look, there are a lot more people feeling a pinch with their mortgage.
With people feeling a pinch, I suppose we're looking for somebody to blame. And the Aussie banks are a great target, aren't they?
They're a great target.
The Teletubbies, some people call them.
Yep.
Exactly. However, it's not just the Aussie banks involved with this. I mean, there's great lending organisations such as yourself that are a part of the market. Yep. But also, as mentioned, the Reserve Bank has got skin in the game with the way in which they manage things. But also, we've got a new government policy, new priorities in that regard. So if people are annoyed at their high interest rates, who should we be angry about? Who should we be angry with, Dan?
Yeah, well, look, you know, the government did go, the central bank did go through a very significant rate hike. Look, there is, again, some criticism coming out from, I think, Bernard Hickey believes that the banks haven't passed on a 50 basis point decrease in their wholesale fundings. And this is really important to understand. Banks don't, their cost of funding or their cost of business is not the OCR. It's a part of it.
Mm-hmm.
But, you know, they do borrow from offshore places. You know, they issue bonds, they have, transactional accounts, etc. So you know, they have been criticised for not passing on some of their cost reductions that they've got. So you could point a finger at them if you wanted.
Yeah.
I think the other thing for us to acknowledge, and whilst no one has a crystal ball at this stage, there is some commentary suggesting that rates are going to stay at this relatively high level for longer, and they might not be be in a rush to drop them, and that is because there are a few global risks at the moment.
Yep.
International shipping is one of those. That means that inflation, whilst it is heading in the right direction, it may not be heading down fast enough.
So, I mean, look, I just want to make this clear. This isn't a financial advice segment. We're not saying, hey, you should do this. It will stick with us. We'll make you rich. It's not what we're doing here. But I do know, Dan, that will be people listening to this at the moment saying, so what do I do with that? Especially if I've got a mortgage which is coming up for renewal at the moment. As you said, mixed signals from the markets. How do you get the advice that you need in order to make a decision? There's no crystal balls, but if interest rates look like they're going to be stable and they're relatively high at the moment, do we just ride this out? Or where do we get advice, I suppose, is a better question.
Yeah, one thing that I've learned in my career is that I have listened to some incredibly intelligent people, very, very, far more intelligent than me, give predictions about these things and be wrong quite often. And so the one lesson I've learned is no one knows.
No one knows.
So,
okay, good.
There is a degree of predictability, and so we know from what the Reserve Bank has been saying is that they're not likely to be cutting that OCR anytime soon by huge margins. So I think it is safe to assume, look, interest rates at our relative level probably are going to stay within this sort of within 1% of where they are now.
Yeah.
They're not going to fall off a cliff. So and we have seen some banks starting to drop their margins. So if anything, there might be some easing coming. I think, what should people do? I mean, they can always talk to a financial advisor, but there are a couple of principles that people often think about when they do have rates rolling off, facilities rolling off, and one is to stagger those. So instead of having all your debt in 1 year, you can have 1, 2, and 3, because you get a bit of the benefit of the longer term interest rates typically being a bit lower, but then you get the benefit on the short term that if rates do rise, you get some of that. So it's a risk diversification strategy, and so and that can work on the way up and on the way down as well with interest rates. So look, that is something that people can consider if they want to mitigate their risk. Others will take a very strong point and they'll say, look, I know that in a year interest rates are going to be lower, so I'm going to put all my debt at 1 year. But you need to be confident. And as I said 2 weeks ago, one bank was saying, hey, they're going to be jacking these things up again. It is a bit of a roll of the dice at the same time.
Well, it pretty much comes down to that, isn't it? And hey, so essentially, if I can summarize, what you're saying is don't trust the Aussies. Get some financial advice. But honestly, even the best financial advisors are guessing. So pick a number and go with it. Rock, paper, scissors, if that helps. But things are likely to be, in your opinion, pretty much similar for the next medium term. So you don't.
Look, if I was a betting man, I would say that they are going to stay roughly at the rates that they are, with a bit of easing. In our rates, 25 basis points. But that's an opinion, and I wouldn't be.
And hey, I know you're not a betting man, and we're certainly not holding you to that, Dan. We do appreciate, though, your wisdom and insight. So thank you for the work that you do with Christian Savings. Of course, if people wanted to find out more about the work that you do and a wonderful way of investing into the kingdom of God, they can check the details on the website.
Yeah, check us out at christiansavings.co.nz. We primarily exist to see churches and charities thrive, but we provide individuals with a way of earning on their investments whilst also supporting churches and charities. So it's a great win-win for anyone interested in investing in term deposits or call accounts.
Exactly. And whilst it's bad news for people with mortgages, it may be good news for people wishing to invest with slightly higher interest rates at the moment. Dan, thank you again. Thanks for joining us.
Kia ora.
Thanks for joining us on Rhema. Now, if you found value in today's content, hit that like button. And if you haven't already, consider subscribing to our channel with the subscribe button. This really helps us to continue to produce more quality content for you. And hey, if you'd like to stay updated and never miss any of our future videos, ring that notification bell as well. Don't forget to follow us on our other socials, which are in the description below. And until then, stay tuned.